Hi, I'm Stock Investor Davis. Welcome to the channel. Why is TSM's stock price rising after reporting its fourth quarter 2023 earnings? In this video, I'm going to answer that question and more. Before we get started, please tap that subscribe button. And if you find this video informative, please give it a like. Let's start with the question at hand. Why is TSM's stock price rising after reporting its fourth quarter earnings for 2023? To help us answer that question, let me introduce you to C.C. Wei, TSM's CEO, who says this.
For the full year of 2024, we forecast the overall semiconductor market, excluding memory, to increase by more than 10% year over year, while foundry industry growth is forecast to be approximately 20%. For TSMC, supported by our technology leadership and broad customer base, we are confident to outperform the foundry industry growth. We expect our business to grow quarter over quarters throughout 2024, and our full-year revenue expect to increase by low to mid 20% in US dollar terms.
Wow. That felt like a mic drop moment for me. I thought people in the crowd were going to start cheering after that last statement. In our full year revenue, we expect to increase by low to mid 20% in USD. Let's apply that forecast to its income statement. For us to project its fiscal year 2024 income statement, I'm doing two things. First, applying what management has given us, and second, making a bunch of assumptions that I consider reasonable. Near the top, we see management's guidance of revenue to grow between low to mid 20%. Then, right above my head, are the list of assumptions I'm making, including one about revenue. My list of assumptions include revenue increasing by 22%, gross margin being 52%, operating margin being 41%, non-operating items remaining flat, but its tax increasing in proportion to its revenue, and lastly, the shares outstanding remaining the same. When we apply all these metrics, it results in an estimated $30.99 billion in net income and $5.98 earnings per share. We can now use these figures to estimate a fair value range for the stock price. We're going to take a look at two different methods to estimate a fair value range. This first one is using price to earnings. See on the right side are the assumptions we're carrying forward from our previous slide, projecting revenue to be about $84.56 billion, leading to a net income of $30.99 billion, keeping the shares the same at 5.19 billion shares, leading to an earnings per share for the full year of about $5.98. We're now going to multiply the earnings per share figure by a previously established PE ratio range with a low of 16 and a high of 30, noting the average of 22 times earnings. Multiplying that low of 16 and the high of 30 by our estimated earnings per share figure of $5.98 results in a fair value range of between $96 and $179, making the current price of $113 a fair price, favoring the buyer. Generally, this company trades with a PE ratio between that range of 16 and 30, and therefore I consider it fairly priced. Understanding that the closer the current PE ratio is to 16 in this instance makes it a better deal as a buyer, and the closer the current PE ratio is to the high end of 30 makes it a better deal as a seller. Moving to our second fair value calculation using price to sales, note we're using the same assumptions as in the previous slide. The difference, we're now going to focus on sales dollars per share, which in this scenario is $16.31 per share. We then multiply our price to sales figure by a previously established price to sales ratio range with a low of 5 and a high of 10 times sales, noting the average is 7 times sales. Multiplying that low of 5 and high of 10 by our estimated sales per share of $16.31 results in a fair value range of between $82 and $163, making the current price of $113 a fair price, slightly favoring the buyer. Similar to the previous slide, generally this company trades with a price to sales ratio between that range of 5 to 10, and therefore I consider it fairly priced, understanding that the closer the current price to sales ratio is to 5, in this instance, makes it a better deal for the buyer, and the closer the current price is to the high end of 10, makes it a better deal as a seller. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Otherwise, we see the stock is near the center, but on the upper half of an uptrend beginning November 2022. Alternatively, it has been trading primarily between $85 and $104 since January 2023, and only after reporting earnings has gone up and over that consolidation range. We also see some strong resistance around $118. Both viewpoints appear reasonable and within our established fair value range. I'm okay with the price. Let me know your thoughts in the comments. Thank you for watching. Please subscribe.